Hello, I'm Christopher Ng. I'm the trainer for the Early Retirement Masterclass. Because the previous videos have been a little bit too easy, so Dr. Wealth has challenged me to actually combine my next lecture with a mukbang video. So today I will be giving a talk on dividends investing in Australia, and at the same time I will be eating this packet of Hakka Soon Kueh. It's, I think, probably quasi-vegetarian, and I managed to get a packet of these Soon Kueh for about $7 at the Bugis Street, just right next to this building here. Alright, so let's go. Okay, so what I'm going to do now is I'm going to unpack my lunch, and I've been waiting for a very long time to get this lunch. Now, there is a variant of Hakka Soon Kueh that I grew up with in the town of Senai in Malaysia, and I grew up in this village where most of the kids and the neighbors spoke a lot of Hakka, and they had a very traditional kind of Hakka Soon Kueh, but I think this version that I got is it's a little bit different, alright, from what I'm used to in Malaysia. It looks like this. It comes with dark soya sauce, even though we don't really use dark soya sauce when we eat it in Malaysia. So, okay, so I'm going to start by just removing one piece. They kind of look individually wrapped. I'm going to take a bite and then we will begin our presentation proper. Okay, so here goes. Unfortunately for me, this doesn't taste anything like what I used to have when I was a kid. It actually tastes like an ordinary Soon Kueh. Okay, so today I'm going to talk about dividends investing in Australia. Australia is a favoured destination for Singapore tourists. In fact, a flight from Singapore to Sydney takes about 7 hours and 50 minutes. All right, so it's I would say it's a fairly short flight if you compare that with a flight to London. Australia is also a very good place to be working class. So when I was researching into the country, we find that it has one of the highest minimum wages in the world at about $20 per hour. All right, so Singaporeans who are extremely stressed out as a professional or manager can credibly find a lifestyle at about $20 an hour in Australia, where it's a lot more laid back, and you can do work that is more like working class in nature, right? For example, you can be a cashier at their Woolworths, and that's a perfectly good lifestyle over there, right? And of course, many Singaporeans have studied in Australia, and they are very familiar with the kind of lifestyle. And what's really useful is that the exchange rate is almost 1-to-1. Okay, so one Australian dollar is about 98 Singapore cents. Okay, so that's a little bit of background on Australia. Okay, and how can we begin to invest in the Australian Stock Exchange? Now, if you have a broker and the broker allows you access to the US markets, there is an exchange traded fund, EWA. And with EWA, you're able to get a diversified portfolio of Australian stocks. All right, and you don't have to make any more decisions. It's basically diversified. Within the Australian Stock Exchange, they have an index that's very similar to Singapore that consists of blue chips, and the 50 largest Australian stocks weighted by market capitalization form their core index. All right, and for the folks who want to buy from the Australian Exchange directly, you can do that with your Interactive Brokers account. All right, go into your account settings, scroll down to stock trading permissions, add Australia to the list of countries, and permission will be granted to you within the next 24 hours. What is particularly interesting for Interactive Brokers investors is that the margin financing rate is about 2.5%. All right, 2.5% in a couple of days is actually lower than the Singapore margin financing rate, although the Singapore margin financing rate as of yesterday seems to have adjusted to a much lower number. All right, but at 2.5% margin financing rate, it's actually a very decent number, all right, that allows you to invest in Australia through a leverage or margin account. All right, before I move on to the next slide, I'm going to get myself a drink. My throat is feeling a little bit dry. And for the unfortunate folks who have invested in the Chinese markets yesterday, I have deliberately chosen a drink that's quite appropriate for the situation. Poca, right? So if you know a little bit of Cantonese, right, you might be able to catch the joke. Okay, so let me have my drink. Okay, now let's move on to our next slide. And some useful facts about investing in Australia is that thanks to a Singapore-Australia double tax treaty, Singaporeans who invest in Australian stocks are taxed at 15% for dividends. Now, what does this mean? It means that if you find something that gives you about 6% dividend yield, you can expect that after taxes, you'll be bringing home about 5%, all right, which is actually a fairly decent amount of dividends that you can get, given that the Australian stock market is fairly deep. And they got a lot of interesting stocks, all of which give a very, very attractive dividend, right, that you might not be able to find in Singapore. Okay, for the early retirement masterclass, normally what we would do is we would conduct an emigration exercise. And on August 2021, we've conducted a fairly detailed study in Australia where I made my students gather economic data, right? And this is what we've discovered, all right? So they believe that the Australian market is recovering from COVID-19, although there are multiple lockdowns, all right? There is a very low equity risk premium, which means that actually Australian equity is about fairly priced compared to Australian bonds, all right? The equity premium isn't particularly high. If you actually live in Australia as an expat, you should have to budget around 33,000 Singapore dollars a year as your annual expenses, all right? So if you are someone in Singapore who is trying to live in Australia, obviously for the first few years, you can't live like a local yet. And so you should budget about $33,000 to live there. And if you follow my program, you will need a portfolio of about $600,000 invested in Singapore to be able to sustain that kind of lifestyle in Australia. And even then, you can only do that with a leverage account. So you need to borrow a little bit of money from the broker to actually allow that portfolio to work. Okay, so generally speaking, if you want to keep your money in Singapore and you want to live in Australia comfortably, you need well more than $500,000 or $500,000 in order to settle down over there. But of course, the good news is you do not have to work in a very stressful, professional kind of lifestyle in Australia. You can actually work and earn a median income there, right? So actually, it's a very good lifestyle choice. And I've known many of my colleagues in Singapore that have actually taken the plunge and they hold Australian citizenship today. Okay? All right, so let me just get another bite of my Kueh, which actually has been very, very disappointing so far. So I'm probably gonna get one or two more bites and then I'll complete the lecture. Maybe it might taste better with some soy sauce. I'm going to put some soy sauce later on. Okay, so what we're going to do next is that we're going to spend some time studying the Australian Stock Exchange in greater detail. And we're going to go through 4 sections. We're going to look at strategy selection, stock screening, and I'll be selecting my first stock for purchase in the ASX, and I'll demonstrate another aspect where we look at another stock, right, where we actually do not end up buying that particular counter. Right? And we'll also show you how we do market timing within the program. So let's begin with strategy selection. So for the early retirement masterclass, we make our students go through this lengthy process where we actually build a baseline by doing a back test. Now, what is a back test? A back test is basically asking our question, what if we ran an experiment where we invested in all 50 Australian stocks for the past 10 years. And then what we do is that we will record down the returns, we will record down the standard deviation or the risk throughout the 10 years, and we take down this number known as the Sortino ratio, right? The higher the better. That is a risk-adjusted return that we benchmark strategies against each other, right? And so this is actually done by an Australian student of mine, okay, from the latest batch. And what he has done is that he has done this for baseline as well as the various factors that we are going to investigate today, all right? What is a factor? Okay, a factor is a specific property of a stock that may lead to outperformance. So a low price to earnings ratio can be a factor. A high dividend yield can be a factor when we invest, right? So what my program does is that we look for 3 or 4 factors that can lead to outperformance, and then we combine them, right? We combine them into a score that can be used to rate the individual stocks, okay? Now, you won't be able to make a lot of sense from this table unless you attend my class, but I'm going to tell you what the table means. What this means is that if you're investing in Australia, there are about 4 strategies that you can think about. One is to look for stocks with a low price to earnings ratio. One is to look for something with a low price to book ratio. And another opportunity is to find something with a high 180-day relative strength indicator, which means the higher the momentum, the better, right? When we look at RSI, we are saying that the stocks that have done well in the past will continue to do well in the future. And finally, we go for high revenue growth. So Australia is actually a very balanced, very mature market that allows value, growth, and technical analysis investors, right, to be able to do fairly well in this market, right? So what we have done is that we have a working strategy for the Australian stock market, and so the next thing that we do is that we try to generate the stock picks, right? So we perform a screening process by combining these factors into a score, and we use computer software to actually start ranking the stocks based on this particular stock, all right? And today we're going to look at the screens that we have, and we're basically going to go through 2 stocks that we might consider in our portfolio. The first is Suncorp Group. It is a banking and insurance company, right? And that's the top of our list, right? And the other stock that I'm going to look at is Mineral Resources. And the cool thing about investing in Australia is that Australia has a lot of commodities. And as China is a consumer of these commodities, you find that Australia has a lot of these companies, mining companies, that can be very attractive to an investor. And this might not necessarily be found if you confine yourself to our local stock market. All right? Yeah, so, okay, so I discussed strategy selection, and now what I'm going to do is I'm going to add a little bit of soy sauce into my food. Okay, I don't really know how to even open this container. It seems sealed, and I'm kind of worried that I might make a mistake and end up messing myself up, right? So, okay, I think, okay, I managed to get it to open. Okay, so I got some dark soy sauce out. I'm going to have another bite, okay? And we see it tastes better with soy sauce, right? Yeah. I guess the general rule in life is if you don't like the taste of something, you should add some dark soy sauce so it tastes slightly better. And if adding dark soy sauce doesn't improve the taste, then maybe you should add some chili sauce next. Alright, thank you. Tissue paper. Okay. Okay, so I'm going to carry on my lecture before I add some chili sauce to my soon kueh. Alright, and okay, so we've elected to look at 2 stocks, Suncorp Group and Mineral Resources. Okay, so let's go into my first ASX stock, which is Suncorp Group. And Suncorp Group provides banking, insurance, and wealth management solutions. The beautiful thing about looking at Australian counters is that the dividend yields are often quite generous, and we're looking at a nice forward dividend yield of 6.37%, right, before withholding taxes. So if you were to buy this counter, you are very likely to be able to get more than 5% every year. Okay, so that to me sounds like a really good complement to my Singapore REITs portfolio. And so what we do is that we want to decide whether is this a very good time to enter the stock market. And so with some of the tools that we have available on the internet, you'll be able to find these trading breakout tools that attempt to allow you to decide what kind of parameters you use to decide whether you can or cannot buy a particular counter. And in this example, we have to first find the best parameter, right, which is I think 20 days and 180 days, right? And then when we select on the particular point on the screen, they will show a chart, and where there is a green arrow, it would signify that it's actually okay to buy the stock. All right, so basically what we're doing here is that we're trying to minimize regret. And from what we're seeing here is that, well, I think it's actually okay to actually buy the stock right now, right? You don't have to actually use the same technical indicators as me. You can pick up some technical analysis skills and can use that to decide whether you want to get into the counter. All right, this is just a showcase of how I do it in my class, right? And market timing is not very important in my program. All right, and so with that answer in mind, there isn't any delay anymore. I went into Interactive Brokers. I bought 100 shares at 12.82, currently leveraged at about 2.2. Okay, now right now the stock has gone down quite a bit because of China. Okay, but I think I'm confident that because of the dividends that I'll be able to collect year after year, I can just leave it in my portfolio and it can become an extremely long-term kind of investment for me, right? Yeah, and over time, if you're able to collect stocks like this, you might end up like me with about 60 over-counters in the stock market, with about $2.6 million generating about 13 to 14,000 every month, all right, which is actually produces quite a good lifestyle, all right? Okay, so now we're going to look at the next ASX stock, but not before I have another bite of my Hakka Soon Kueh.
Okay, I really struggle with these containers. Okay, right, let me spread it out this time. And we will add some chili into my Soon Kueh. Okay, and let's see whether it really does taste a lot better with chili and that sort of sauce, right? So let's try this. The chili is quite fresh. Okay, I think this Soon Kueh is starting to work for me. With some chili and that sort of sauce, it's actually starting to taste a lot better. You know, of course the chili is very hot, it's chili tiny, so yeah.
With the chili and the dark soy sauce, the Soon Kueh tastes quite nice, and I'm actually quite surprised that I'm able to finish one while actually conducting short little introduction to Australia. Okay, let me finish my meal, get a drink. Okay, now Mineral Resources Limited is one of those companies that I think Singaporeans should look out for if you want to invest in Australia. Now, Australia is full of these commodities companies: Mineral Resources Limited, Rio Tinto, BHP Billiton, and these are commodity companies. For example, Mineral Resources have interest in iron ore, lithium, and manganese. Lithium being particularly strategic, I guess, if you're talking about things like electric vehicles. And once again, the dividend yield happens to be about 6%. So it's really one of those counters that you can hold, and hopefully you can benefit by holding long term. All right, the median target price actually very high at about $65 at its current price of $45. All right, so you can actually buy the stock if you want to. But what I'm going to do is that I'm actually going to use the breakout tool, and I'm going to select a technical indicator. And right now, the system is telling me don't buy it yet. Okay, with an 80-day breakup and a 100-day breakdown kind of window, the latest arrow is red. Okay, so what they're saying is that while Mineral Resources Limited is a good stock, maybe you want to wait for a while for the arrow to turn green before you buy. So this is exactly what I did. I will wait for another day. Okay, in fact, I will check maybe once every 3 to 4 days to see whether the coast has become clear. All right, so anyway, it's on its way down, so we could afford to wait for a couple of days before making our move. Okay, in summary, right, my early retirement masterclass framework that we normally apply for the Singapore markets can be applied to an overseas market like Australia, right? You need to devote about 1 to 2 hours of your time, all right? And all the tools that are shown today are actually taught in my program. So if you like this format of watching a trainer have a mukbang video and eating something while demonstrating an investment concept, go ahead, smash the like button, comment on the video down below, all right? And I hope to see you attend one of my future previews in my program. Thank you very much.